Alright, traders, one more rant. Been a long day. We had all the Aussie data came out today. We'll get onto that shortly. Just quickly though, I'm going to get out of my short dollar yens. I shorted up here after some news came out that couldn't pass the bill. Market's not really fussed with that, given we got some US dollar weakness. So some US dollar resurgence yesterday, and the Fed today. Probably not the price action I was looking for at the start of Europe that was holding up so well. So I'm going to get out of that. In terms of my DAX as well, yeah, I mean, look, it's a little bit associated going up with the pullback in the euro, but just want to leave the euro there. We'll see how euro plays out shortly here. Looks like it's going to test the 116 level, but the DAX itself doesn't have too much reason to rally. Generally, you don't go. I was short dollar yen, and I was a bit concerned about risk off coming as the rally from yesterday on hopes of clean sort of pass there from the Obama appeal dashed as the Senate failed. So they got like a little thing through, but not the main vote, and so probably not going to get that through very easily at all. 9 Republicans voted against it. So this market is poised here at some interesting levels going into this FOMC. Now we are concerned a little bit about the chance that Yellen comes across as a little bit more neutral, a little bit less dovish than the market is. That's very possible. But what also is very possible is that any sort of US dollar gains from that are short-lived, as the market tries to push its agenda rather than listen to the Fed, because they already think the Fed's wrong in terms of how much they've quoted the Fed dot points in terms of raising rates. And so they're probably going to keep on pushing their agenda. It's very unlikely if Yellen also starts to mediate. God, not even sure which part of the world this is from. Let's have a little listen. Yeah, hello, Tony speaking. 1 second, Tony. Yeah, some broker somewhere trying to sell me something. If I was sure as a broker, I would have played it again, guys. They're always hilarious. Trying to sell me some latest FX knowledge. Be fun. But yeah, what we have going on here is that the market's not wrong, sort of thing, and it's very unlikely she can say anything to change the market's mind. And so while she might, prompt some short covering in the US dollar, I don't think she can change the US dollar trajectory. And so looking to sell dollar yen on rallies and looking to buy euro on dips, particularly euro on dips, makes a lot of sense. And looking to buy the Kiwi, the Aussie, and Canadian dollar on any pushbacks is also a good game. What we're getting in dollar CAD is potentially the beginnings of a reversal as well. The Aussie fell today, and we'll get into the Aussie in a second. But a little bit of a chance here that the market's going to push back up. That's warranted and about time. But there'll be plenty of sellers waiting to get into this at 126.50, 127. So, the dollar CAD probably going to have a lot of support too on any sort of snapback. And so we're looking basically to choose what pair you want to play US dollar weakness, and you choose that based upon whether the markets still believe in the euro story, which is also a question, but also one second. My wife has kicked out some cords here. Tries to do the right thing, cleaning it up, but really gosh. Alright, we're back. I'll fix that up shortly. So the question is whether you are trying to catch which pair we're going to buy or sell the US dollar against. I mean, is dependent upon the stock market and oil, and just overriding which theme has got the most grit to it. Euro is probably the safest bet, euro long on dips, but there is a little bit of danger to that trade on the horizon, and we'll get more into that later on, I suppose, probably tomorrow, as we discuss post the Fed what way we're selling the US dollar. But it's going to be very hard for me to change my sell the US dollar feel in the coming days. I'm actually hoping that she comes out a little bit hawkish so that we can get a pushback and get some really nice levels, because I'm fairly confident that the market's going to play its agenda again. Let us have a look at the Aussie though. So for our the Aussie in general is sort of get rid of there. Got a couple of old positions there. The Aussie in general is a little bit resilient right now, and you know what you have to play into this price action is that the market easily could have sold off aggressively given the weak CPI numbers and then the jawboning from our central bank governor. So far it hasn't done that. Okay, so far the market's been extremely resilient, and this is the scenario we talked about yesterday where the bear's biggest chance to make an impact has been, you know, on this data today, on this RBA speak, and the market's pretty much ignoring, you know, that negative sentiment. And so the overriding factor that's driving this is not so much the strength of the Australian economy or the potential for rate hikes. It's got up here mainly on iron ore and on US dollar weakness. Okay, and those two things are still part of the agenda, still part of the game plan. And so the Aussie dollar is probably going to do quite well over time if the market didn't crash lower and there's not a new paradigm where they're selling everything, you know, buying US dollars against everything. Then the Aussie is going to be quite a good buy on the dip. You might get another leg lower here, especially if the Fed comes out a little bit more neutral. You might get down to 78.60, even a little bit lower, 78.40. But you know, still looking to buy dips on this particular pair as the price action is just so solid. And you know, to me is showing the colors behind the rally here, that the bulls are in so much more demand for the Aussie dollar than the sellers. And you know, there's just no appetite to sell the Aussie. It's amazing that the market's finally broken into a fresh direction, and it's pretty keen to keep going, right? So this is viewed more as consolidation than anything else, and we've got to respect this multi-year break that it's done, and that is going to be pushing to the top side. So on the dips here, I'm going to be looking to buy Aussie. Here's fine. Lower is even better if we get that chance later. But I like that, and I like selling pound Aussie, I like selling euro Aussie in the current market too. Aussie Kiwi is another one which makes a lot of sense. It's back at some nice levels, back at this 106 level, and consolidating a little, so we can get a little bit of upside there if you want to come into another trade where you're just trying to express AUD outperformance. Any news about dollar yen? Dollar yen, yeah, had reasons to stop its rally, but it held up quite well. So there's no mood right now, probably pre-FOMC, to sell US dollars aggressively. In fact, the US dollar is making some nice little gains here against the euro, and made a couple of bit of gains against the CAD, Aussie, and New Zealand dollar today. And the brief little rally in the pound was reversed pretty quickly too. If the pound gets back below 130, it might start to look a little bit more negative. Definitely some smart money getting into some short pound Aussie and some short pound Kiwi. Some of my better traders have been doing that, and they play those crosses quite well. So, you know, I do respect that when it happens. And I just closed out some short dollar yen as I had, because the lack of passing Obamacare repeal bill did not really hurt the dollar yen sentiment in Asia, and so we might be pushing higher, especially if stocks remain that upbeat tone into the US session. And so, you know, the dollar yen's enjoying solid support right now, but overall, when they go back to selling the US dollar, then probably dollar yen's going to struggle just like it did for most of last week. But yeah, it's definitely not my favorite thing to sell when stocks are strong, that's for sure. It does open up the door to be looking to buy some euro yen, pound yen as well later though, tomorrow. So we'll look at that in the update tomorrow after the FOMC. So yeah, my main thing I want to express to you is that I'm turning bullish on the Aussie because of the price action. I'm not really that bullish on the Australian economy. I live here, I know what's going on, but you have to respect if the market wants to pick a pair, you can make a good argument for the Aussie compared to most, both technically and outlook wise. The Aussie's got a bit of room to move, and when it becomes a darling of the market, if you've been trading for a while, you might remember what happened back in 2009, 2010. That was some fun times here. Yeah, you got to remember these days. You know, these were huge rallies, month after month after month after month, non-stop. 65 straight to 93. Consolidated a little bit, then pushed to 110. That was month after month after month rally, relentless. And so if the market really picks a pair to sort of rally with, Aussie, like the CAD, where the CAD went 1,300 points recently lower without a pause, Aussie can do 500 points to 85 very comfortably. There is worlds in which we get to the mid high 88s by the end of the year, without really causing, oh my god, sort of reactions. It's not that big a deal for the Aussie to move that quickly. And this is actually the abnormal part of the Aussie trading. Now that we've chosen a direction, I suspect that it's going to be underpinned going forward. RBA's gently trying to stop it, but yeah, it's also respecting that some data has been quite strong in Australia, our employment data anyway. And with China being a non-issue and US dollar being on the back foot, yeah, Aussie can trend higher. I mean, that's it. It's like a trend, right? It just takes time. And same as the euro. It's just a trend. It's people say, well, it's getting ahead of itself. Yeah, it doesn't really matter. The market 115 to 120 is not really overvalued, undervalued. It's just the way the market will move in a trend. If you learn to view the market as sort of like a tide going one way, tide going, one way is out in. It seems definitely like this shift is changing to US dollar selling, and that tide will be hard to stop here without some really nice US data that changes the tone, or some big wins for Trump really quickly to get the market focused on Trump's agenda. If it keeps on stalling, keeps on mucking around, and data keeps on coming more to the weak side, and we get closer and closer to the ECB announcements, just fuels that potential that there's no reason for the market to have it even stay in a range trading, which is probably the other option, range trading or a nice US dollar sell-off is my two default cases. And the very small case is that somehow US economy or Trump changes its tune and we get that US dollar reversal into the end of the year. Not many people looking for euro parity anymore, that's for sure. Alright, let's have a look at some of the research out about the Aussie and the FOMC tonight. Yeah, and another note on positioning, right? The market's probably going to use any sort of US dollar strength here to get out of some stale trades. So, there's a lot of people under pressure here on short euro. Imagine all the sellers of the euro between 116 and 115 that have to get out of their trades or want to get out of their trades. That's going to provide lots of buffering. The other big sideball, curveball could be a stock market correction, which it makes sense, right? If the Trump agenda or US economy weakens to the point where it becomes a problem for stocks, then yeah, a big 10% fall in US stocks might lead to some US dollar safe haven buying against certain pairs, namely Aussie and CAD and New Zealand. But let's not go there until it gets there. And definitely safe haven buying for Swiss and yen in those scenarios too. What do we have here? Westpac's response. Westpac's a big Australian bank. Logging into Westpac. What am I doing? Get out of there, yogurt. Jesus. Just first impressions on the CPI numbers. Biggest surprise was a fall in fresh fruit and vegetable prices. Lack of any broad inflationary pressures in the economy. Core inflation was pretty strong though, so well, it was at expectation, so not all elements of the report today were weak. Just quickly, because it's such big data night tonight in terms of potential moves, we're going to check the technicals here. Sometimes I miss how close we are to some big levels. The 200-day moving average is creeping higher here for the euro. The longer it spends higher, the more quickly it'll start to move up. RSI is pretty strong, but not that great. And we're starting to see some creeping higher here. The dollar yen's pivoting around its 200-day. I wasn't selling off that level, but that level probably came into play last night. Let's see the high of the day. Literally the 200-day, right? So, I mean, that's good enough reason to sell it as any. That stuff happens all the time, guys. So, I really should add the 200-day to my charts. It's actually silly that I haven't. Still got a fair bit of room here for the pound yen to get back down as well. You look at the CAD, 800 pips away now. Wow, wow. And see, the Aussies are only 300 pips away, so it's not really started to move at all. The dollar CAD's RSI at 17 is the most noticeable one there. That's why it's just a matter of time before we see a reversal in the dollar CAD. But that's probably the, rather than trying to pick the reversal, you try to pick the top in the reversal. That's a much better game to play. 200 pips, say. Start looking to sell it. And these are just some highs. Above the Aussie, April 25th. Okay, 81.60. It's interesting, once you break 80, the market will be looking pretty aggressive to the top side. Analysts will come out with 83, 84. If that happens, but just on the way up as well, you're probably going to see some stalling. So I'm just looking at where we might get to. And obviously 75 is a big number for the Kiwi dollar. A little lack of energy today, guys. I'm a bit tired, but I'm pretty keen to see what happens tonight. The markets, we've been waiting for this opportunity to get into some euro trades long, and we're probably going to get one tonight. Alright, the US dollar's biggest problem is it can't expect help from the Fed for a long time. Won't change following the FOMC meeting. Unless they talk about balance sheet adjustments. Fed's playing second fiddle. Technical signals driving the FX through the summer. Preparing for the euro one level at a time, that's true. and a slightly dovish FOMC or neutral FOMC is probably going to support stocks. So stocks have little reason to be selling apart from you know, any sort of Trump news, but that seems to be half decent anyway, given the rallying of the Republicans to vote the small bill, but not the main bill. But they're going to have a couple of more votes on the same topic in the next week. So perhaps the 9 Republicans who are voting against it might be pulled across. Alright, so this is interesting. When the FOMC meeting ends without a press conference, like today's, it's a smaller FOMC meeting. It's not a major one. There's no press conference. Then the changes on the day for equities, bonds, and FX are slightly higher than a regular day. So volatility is expected to be bigger today than usual, but it's lower than an FOMC press conference day, which is normal, right? So pretty much a normal day, they reckon. If the FX market has any hope of getting its teeth into something, revolves around 2 main stories. A tweak of the Fed's characterization. Yeah, so if they talk about inflation and they change the way they talk about inflation, that's dovish, right? If they give the timing of the balance sheet adjustment in a wording which is like coming soon, then you will see that's a form of tightening. That's the hawkish side. That's where the hawkishness comes from. This is where the dovishness comes from. Yeah, Aussie's having a nice little move here. I don't mind selling Euro Aussie, guys. Let's have a look at Euro Aussie just quickly. Should have sold at the start of the stream. It's a trade I've been doing mainly in my account here. Just a short-term little tactical play. I think the Euro's going up over time. Just might have a little breather now. There's a story there revolving around. We'll talk about it tomorrow. There's a story revolving around the bond market and the timing of the bond market moves, and it could be delayed until we get the big moves in the European bonds might come after the ECB taper timeline. Until we have that, it might be sideways action on the euro actually for a couple of months, giving opportunity for US dollar weakness to be expressed better through the commodity currencies. And with oil enjoying nice gains, iron ore enjoying nice gains, copper surging, you can really see that story unfolding. This could be a relatively dull meeting. Famous last words. Yeah, look, no one's expecting anything tonight, right? And this was actually what I was focusing on a bit with my clients today. The VIX has hit an all-time low, closing at 9.43, 96 day below 10, longest streak ever. So the market's pretty much priced as if nothing bad's happening. Oil's up 3% on Saudi, planning deep cuts, you know, outside the OPEC agreement, which is interesting. I think they're just jawboning the oil market high. The market might not believe them, but they might get a couple of months grace here. Right, so they took a little vote to start debating the healthcare, but then they failed to replace the replacement plan. And this was interesting. Trump saying he may reappoint Yellen. Yes, I like her. I like to see rates stay low. She's historically been a low rate person. Okay, all right, that's really good language there, Trump. Trump speak. That's what we're learning to speak. I like her. She does what I like. All right, there's not much there. So yeah, I mean, expect a little bit of movement today. Maybe some US dollar pushback is the market might find ways to get that. If it doesn't, and there isn't much there, or there's just inflation tweaking, no balance sheet stuff, then the US dollar is probably going to be in trouble. And we'll look to be selling the US dollar in any event. So if there is not much there to help the US dollar, we're looking to sell the US dollar against something. Talk about that tomorrow. If there is something to help the US dollar, we'll be patient, but looking to also buy the euro lower. Depending on what's said, though, we'll talk about which pair to play and how stock markets react to that. Alright, guys. Any pairs you want me to look at, just send me a little PM. I'll look at them. But other than that, don't expect too much fireworks for the rest of the day before the Fed. You shouldn't expect too much movement there. Keep an eye on the Aussie here. It's staging a nice little recovery. Gets a little bit more serious above 79.20. Probably then we'll get to 79.50, and then people start again looking at that 80 cents. If that was to be the way it plays out today, it'd be like, oh, why is it not going down? I'll have to deal with that a lot tomorrow. So I may point them back to this video. Alright, guys, trade safe. We'll be back tomorrow at the same time.